Hello and welcome back to the show. This is Endeavors AI. I'm the founder of Endeavors AI, a AI automation agency that helps operators, investors, and builders to scale without spending too many cycles on administrative tasks. Today's conversation sits right in the intersection of capital, execution, and unprecedented founders, which is where a lot of real work still needs to happen. I'm joined by Caroline Lewis, managing partner of Rogue Women. Caroline, really glad to have you. Thanks for joining.
Thank you so much for having me. Excited. Yeah, great.
Great. Great. Awesome. So, for folks who aren't familiar yet, let's start with Rogue Women itself. What problem were you actually trying to solve when you launched the firm? Not a headline version, but more a pattern of what you kept seeing firsthand.
Yeah, so I was, I fell into venture capital. I never intended to be in it. There is a firm called Road Venture Partners, founded by Tom Sherry, originally out of the Portland, Oregon area. He is a great mentor to me when I was doing my startup. Between my startup and joining venture, I had, management consulting, work at Nike, a kind of a path, but we always stayed in touch. And I was at a place where I wanted to get back into investing. And so he kind of took me under his wing and helped me kind of look at really at companies from the investment standpoint, not just, the entrepreneur standpoint. And in 2018, I contacted him in the state of Oregon and decided to really look at the landscape of investing in women. And at that time, and unfortunately, it just really hasn't changed much. It's both unfortunate but fortunate for me as an investor. There's just not a lot of capital for those women. It's just under 2%. I think at the height in 2022, we got up to 3%. It's back down to like 1.8% of all venture capital dollars going to women. And when I hear that kind of thing, if you look at the macro trends, you have more women going into higher education, more women filing patents than ever. With the age of AI, whether it's women or men, that you don't really need a technical founder anymore to really get an idea off the ground and test it. Eventually, you need a technical team to really build it. You can get pretty far without a technical founder. There's all these kind of events really leading to a real great supply of high quality founders that happen to be women. Really, the reality is they don't get funding because early stage funding, you invest in what feels comfortable and whether it's markets, geos, whatever it is. And to go against that friction is just really tough because you don't have enough evidence to go off of. So the more things you have in life with someone, the more you're probably going to be like, oh, I trust them, I'll give them funding. The more difference is, it's just harder. And the reality is 98% of the decision makers, I think we're actually at 92% of all decision makers in venture capital, really come from the same demographics, education background. So they just kind of fund the same things. As an investor, I see it as an opportunity. I think I'm one of only 8 funds in the entire country that have a specific focus on women and early seed stage. It would market arbitrage in our point of view, as well as feels great to do something that I truly think is beneficial for the world, as well as go to market arbitrage. So Rogue Women, we invest in women-led tech companies, so software only across the US, early seed stage. Everybody has a different definition of stages these days. For us, that means some sort of prototype, product out, you have a little bit of revenue, or some sort of proof point, and then we'll come in. And yeah, we invest across the country. I have over 14 states represented in our portfolio right now. We invested in over 38 companies. We're investing over fund two. Average check size right now, 350. We'll gear up soon for our fund three as well.
Awesome. Great. So, I think you've touched on most of this. How does Women structure differently than a traditional VC fund outside the obvious focus on the market that's
Yeah, I
underserved?
mean, listen, everybody has to have a thesis, right? So we are different in thesis, both from a demographic perspective as well as the stage that we go after. We love the stage we go after. Otherwise, we're pretty generalist when it comes to industry specifically. The other key aspect that I think, makes us different is really around portfolio construction. It's kind of coming back in vogue now, but we design our fund size and portfolio construction that really optimizes for return capital to our audience. And this should be very obvious to people to do this because that's our job is to return capital at the end of the day. However, inherently, there's a lot of mismatch in alignment structure that happens at VC. So what I mean by that is, for example, we can go and invest into a company. Now it's still high growth, right? It's still 2 to 3x year over year. And they still have ambitious plans where maybe they could IPO or they're still going really big. However, we can fully return our funds off of a $750 million exit or below. So we're not necessarily trying to go after these unicorns, or I don't think unicorns are attracted to most people unless they're like decacorns, right? So it has a much stronger alignment actually with the founders because they have a lot more optionality how they want to exit their business in a way that is also aligned with us. And then of course, it really optimizes for us that ability to play to the higher percent probability of returning a fund because, I think it's something about 92 or 93% of all VC exits happen through M&A under $1 billion. So why not play to that probability than try to go only really for moonshots? That's on we have a few of those in our company, but we're not necessarily relying on those on our return portfolio. So that's pretty inherently different, and we're very strong and conscious of our portfolio construction and staying really disciplined on that. Now, the other key things that make us different, I believe we're still the only fund in the world, or some other funds who have some of these benefits, but we're the only fund in the world that offers childcare for owners, personal financial coaching, executive coaching, a family stipend, and we give a portion of our GP carries the profits of our fund to every founder we invest in.
Wow. You bring a lot of value. Excellent. So the companies that you are working with, they're past the stage of just being an idea, right? They're trying to build, sell, hire. In your experience, from your vantage point, what's the first thing that generally breaks when a founder is trying to scale?
Yeah, stages, right? You're focused on building a product. You really have to just, I think the most important thing, and you hear this over and over again, but I truly think it's so important, is to truly listen to your customer. Don't get too excited about your own cool tech or your own product features that you think are amazing. Make sure that your customer that you're going after thinks it's amazing. Another thing I see at the early stages is people, and it's conflicting opinions. It kind of depends on your business and your business model, but really to the point of like, see if you can provide that value right away and see if someone's willing to pay for it. Because there's a lot of people that do like free, and I get, we always have to figure out pricing. It's always lower pricing than it's going to be. But, you know, people are always surprised when their free pilots don't convert or something, right? And so it's really, if you are offering enough value at first, maybe the price is low, but someone's willing to pay something for it. So I really encourage that. And then the other thing is like, if you know it, I'm a broken record about it, but until you're running a company, you just don't know. People spend their cash too fast, especially at the early stages. So just always keeping an eye towards cash, and you're always trying to balance like growth and development and cash conservation. But there's so much that you're still figuring out in those early stages that to give yourself a little bit more wiggle room in terms of time by really being pretty conservative around your cash is important. Also related to we invest in a lot of tech companies, and there's all different ways that people price or take that money in or contract or, in the early days too, like their contracts are all over the place. Unless you're truly charging a SaaS, like off the shelf monthly fee, your contracts are everywhere. So in the early days, you actually still have a grasp on all your contracts and they're all going to be little unicorns. I encourage my founders to, it's old school and you can leverage AI now for it. But just to know, like, take every single contract, it out against the month over the next 24 months of when you have contracted that revenue, when you're going to invoice for it, and when it's actually going to hit your bank account. Because I see so many people like, I'm almost out of cash, but I have, 300K contracted revenue. And I'm like, right, but, you invoiced. I mean, you didn't specify, 15 days on the invoice and it's 60 days. And so then it's like this weird time where they're like, oh my gosh, my cash flow. The early stages, just know your cash flow. And I think when you're starting, building and contracting and selling and doing and hiring and all the things, sometimes you lose sight of like when the cash is actually coming.
Yeah. Yeah. So important.
And so we all know it's important. It's, we just lose sight of it. And it's a thing that can really speak up on you, especially because, I've seen people who have a lot of momentum. They're selling, they're like, oh my God, I got this customer and this customer. Every contract slightly different that they've sold in terms of terms and everything. And then they have this like, oh no, I'm doing so well. I have all this revenue, but the actual cash related to the cash out is there to buy.
Sure. Sure. So hopefully this kind of touches on it or is a good side note. So where are you seeing AI be of real value to give your founders leverage
Oh my
today?
gosh, there's so many ways, right? I think, I'll stay away from this conversation. Like, obviously, people who are building like AI native companies, it's inherent in everything what they do operationally, but also the actual product that they are offering to people. I'll focus this more on folks who aren't necessarily like AI native product that they are selling to a customer, but they're different variations of their own the product and product enabled service that they're selling. So what we've seen this in our portfolio companies is, and it really has been a transition. I'm sure you've seen this over the past year and a half, where everything from, marketing top of funnel, how people are getting that, how people are doing customer outreach and different tools that they're using, or sometimes they kind of like modify different tools that exist. And then really a big shift that we've seen in some of our companies, especially our tech companies, where they had to kind of re-platform, right? And as part of that re-platform, they also had to hire engineers that did have this mindset of average AI to increase my velocity on my engineering, which wasn't just universal across engineering talent. So that was a really interesting shift to see over the 18 months. And then things like, how companies can even show up right now, whether you're B2B or B2B to C, is really changing. It doesn't, yes, you can get some, kind of the traditional marketing of SEO and how you're showing up, but now you really have to think about how do you show up on ChatGPT, right? Through inquiry. So we've held a few sessions for people on both PR, but then marketing in the age of LLMs and how very specific. So I'll give you one example. If you have a website, you should have a page, whether you decide to, make it visible to the public or just visible to kind of the web, that you actually write an FAQ in the way of how someone would prompt. So all of the FAQs, it kind of reads weird because it's different than an FAQ page that we're used to seeing on our website, because how you're writing it is like how someone will write it up, and then how you're answering it is there's a very set instruction and that you want to answer it so that you're more likely to have your it get pulled into a chat to your thought when they're doing it at their level. So that's just one example, but there's so many other little techniques to just enhance the visibility of the company nowadays. Again, you can leverage AI to do all of that stuff. And then, of course, just operationally, what I've seen companies do is push every single person who's in the company to like, how are you using AI in your daily work, right? Or just, but give people the flexibility to how they want to use it, right? Because it's not AI that solves everything and everyone, right? There are things that actually, it's a faster process to just have it naming them by human rather than try to set the AI. So they're allowing that flexibility, but they're really pushing every single person that works for their company of how are you incorporating AI into your daily life and daily experience. And when you are about to do a process, just taking that step back and you're like, is this something that could be solved completely with AI, a little bit with AI and myself, or no, not quite yet. It's going to actually be more willing to try to leverage it, do that as a human. So I would say a lot of our companies are going through that transition right now. And it's incredible to see the velocity in which people have been able to move just in the past 18 months by incorporating some of these tools and practices
Right. Right. So what I hear is, make it a part of the conversation pretty much all the time, but it doesn't
all the time.
necessarily have to be the answer all the time. Just kind of asking, how can it help or can it help?
Yeah,
Right. Just
I think, I mean, it would be interesting to get your take. I feel like maybe 18 months, 24 months, 2 years ago, people are like, oh, let's use AI for everything, right? Like, it's done this. And then there's kind of like this, is not right for every process. So I think people are being a little smarter of like, all right, let's ask the question. Is this is this more efficient if we fully like leverage AI or completely autonomous? Is it we need a human in the loop still? And then is it really that much more efficient than just having you do it? And or is this actually still just more efficient? And so people being just much smarter, it's not just this assumption that every process in my business is going to be better. If I apply some AI to it, it's more, what actually makes sense given the tools that we have and the resources that we have to be efficient.
Right. Yeah. 100%. Cool. Well, let me take a quick pause here and just talk to the audience. If you find this conversation useful, entertaining, please, we encourage you to like the show and subscribe to the channel. If there's any kind of feedback, good, bad, or indifferent, something you'd like to see in a future episode, we welcome your comments. We take a look at all of them. So thank you very much for watching. Back to Caroline. So, founder philosophy doesn't get talked about enough, especially for people who don't fit the traditional stereotypes. How much do confidence and self advocacy actually affect fundraising and scaling outcomes?
Unfortunately, I think in VC, it's probably one of the most critical things. If you're deciding to go down the venture capital path, um, that confidence and advocacy for yourself, and listen, authenticity is really important to that too, right? So, I've worked with founders before where I tell them, I'm like, listen, the reality is the way in which you are presenting your numbers, it's going to be on target. You have to realize this in VC, I'm always discounting whatever number you get. So you're going to have to play up like your upside case, but you're going to have to really believe it. And you're going to have to authentically get there. Like whatever way that feels authentic to you, you got to get there. Because if you're trying to play out an upside case, but it's not authentic, then it just comes off as weird, right? And you don't seem confident. It's weird. So people who are going on a path of storytelling, confidence, both in their business, what they're doing, how they're executing are absolutely critical to unlocking capital. And there's some great organizations and coaches and people that can really help founders out there, but I would say uh, that is, if you're going down the path of venture, it is an absolutely critical element of what you need to have in order to continue to unlock capital. Whether we like it or not, I mean, especially the early stages, even later stages, it's built on, the ability to communicate your vision, what something could be, how pumped you are about it, what those numbers could actually be. You have to be grounded. You have to know your numbers. I'm extremely frustrated at anybody if they put something out there and they can't walk me through how they got to that number, right? I might discount through to say, oh, I'm going to do 5 million in the first year. I'm like, kind of walk me through their logic. And I still might, I think that's pretty ambitious, but I can see their logic. That's what I need to appreciate. So, but really, so much of it is this person, do you want to work with the VC? Does the VC want to work with you for the next 10, 12 years? And you only have what, 30 minutes pitch and then maybe some follow up pitches to really determine that relationship. And also, a lot of it is going to be how you present and communicate and really how you bring people into that vision of what you want to do. So it's the ultimate kind of big sales approach. Where I've seen people who maybe don't have that as much, there's at least someone on the team that really has that and showcases that. And it is critical to the path of venture. We also look at, and I think there's many VCs that look at this and we call it different things, but a certain level of like that. You talk to so many different VCs who have multiples, or more importantly, founders who exit their businesses, who got really good multiples for their investors, for the and for themselves. And they're just like, it's really about not like there's so many times that you're just like actually quit. Like you have so many things that keep happening and are you're up against. And it's just this perseverance. But I think it's really difficult to have that perseverance if you don't have a deep, deep connection to what you want to do and your why you have what you want to do. So that's something that you go focus on with founders is not just what's your market, what are you building, or you want to it, but it's really trying to get to that layer of like why and kind of who you are that's gonna make you like really keep pursuing this no matter what is going on.
Yeah. Yeah. Good, great points. So looking to the future, if you had that crystal ball, if any of us did, we would probably stop making podcasts and we'd be off on an island somewhere.
The podcast is still very popular right now. A lot of my B2B companies, they leverage podcasts
Yeah.
as a way
Great.
to build more customer base and get content. So I think that's the way of the future for at least another year or two.
Cool. Well, we'll keep on going. How do you see venture firms themselves changing operationally? Do you think that AI will become a part of actually how you support your portfolio and not just how they're evaluated?
If you look at, test case right now, it's a AI venture firm, right? So both from deal sourcing to now investing, um, and also supporting the portfolio companies that they're investing in, at least through the introduction model. And I've seen even before kind of AI was popular, there's some well-known firms have been using ML and other kind of ways to assess the company. You generally have to have like really good data to make those assessments. So I think there's an element where AI will play a role in venture capital from deal sourcing. I think more so supporting founders once they're on board. But I think there's still a lot that AI is just not going to be able to do. And what I mean by that is, so sourcing, for example. Now, if you're sourcing Series A and B, like you have data, right? Like AI is really helpful. You have some sort of data. You have to have elements that you are pulling from. A model which is trained on something needs data, uh, and it needs good data. And I think you run the risk of, later stage companies, you can leverage it a lot, I think, for sourcing. I think the earlier stages you go, you could leverage it for sourcing, but you run the risk of any model where inherently whatever you're training on to order get parameters ultimately leads to, bias that you're filtering, right? So you have to have bias. So how are you training your model? And what biases then are you training inherently in your model? So I think that's a risk. And I think the opportunity is that if you are a VC that still uses like the old school way of sourcing people on the ground, meeting people at conferences and talking to them, you'll have an unfair advantage against people who are solely relying on AI for sourcing. And then when it comes to, I think, VCs are really operational inefficient, and there's some different tools that are coming on the market. So there's a lot of opportunity for the operational side of VCs. And we went through a whole process last year, and it sounds like your company is a great company to do this for VC firm, for other founders, but you just operationally look to see where you can automate things. Not everything's not fully automated, but like going through that process, and we've got a lot more efficiency. What's great about this is it allows us to spend more time on what I call the art of investing, right? The nuance where it's like, okay, well, yeah, this company is raising at this round, but I don't want to just send an automated kind of outreach to GPs of, hey, I have this company would that's one way to do it. But I want to kind of see the idea this company might be raising to some very select VCs, get them excited, and then the round comes together. So there's an art part of investing or supporting your founders that some of those automations have allowed me to do. And I imagine that's going to be true even for more well capitalized firms. And then just the tools of tracking portfolio metrics and reporting really needs to be enhanced. There's some great companies working on some of that stuff, but that's where I see it's a great source for AI. And then also, I think AI has been really helpful, just like with anything, decreasing your legal costs. You still want that, you're still going to pay a pretty hefty legal bill to certain firms, but at least you can work more effectively with your lawyer because you can ask ChatGPT some questions first or Claude questions first. And then you're like, hey, lawyer, what do you think about this? Rather than kind of open ended, let's see what the lawyer thinks. And, 5 hours later, you have a much larger bill when maybe it's a 1 hour bill instead of a 5 or 6 hour bill. So I think those are some ways that the firms can leverage AI right now.
Yep. Never going to replace the personal touch. This has been a great
I think,
conversation.
if I, as a person who invests in funds, and makes investments, similar to like how, the public markets kind of went through, we had to go through funding for the access stocks, like public market stocks, right? Now there's robo stocks, like you can just sign up, get an index and go. I think there's going to be a place where there's both. And I think that's actually really good for venture. Like in the private markets, I think if you are an investor, you will want to go into somewhere where you think there's like a high touch, it's a nuanced strategy that as a manager going into it. And then you're going to want to index against kind of a private market index, kind of a robo advisory type thing, but in the private markets and it's leveraging all AI. I think there's going to be a place for both of those approaches in the portfolio.
Yep. It sounds like a cool future. And we're, experiencing it day by day. So excellent, Caroline. Well, conversation's been great. I really do appreciate it. And I'm sure there are in our audience women founders that are looking to connect or support what you're building. Where would they learn more?
Yeah,
I'll
the
make
best way
sure.
to get a hold of us, we have contact at rowwomen.com, Or you can just go to our website and there's a place where if you want to submit a picture or anything, you just submit it. It goes for our automated AI process, pros and cons of that. But we still do have a few in the loop to like actually, review each pitch that comes in. But there's a lot that we have also automated. So that's a great way if you want to pitch. But if you just want to reach out, again, pretty easy to find online, Caroline Lewis, Lloyd Women, and happy to connect with anybody.
Great. Awesome. And if there are any of you guys in the audience looking for AI automation systems, workflows, whatnot, please check us out at endeavorsai.com. We appreciate you for tuning in to this episode, and we look forward to seeing you on the next. Thank you very
Well, have
much,
a good day.
Carolyn.
Bye.
Take care. We'll talk soon.